Johor-based builder Kimlun Corp's annual revenue returned above the 1 billion ringgit mark last year, and the company's latest quarterly revenue hit a record high, fueling investor optimism. Senior writer John Lai talks to us about its future prospects.
So for the March quarter ended 2025, it posted its highest ever quarterly revenue, 460 million. So it got investors excited for what's ahead for this year. However, its CEO, Pang Kang Hao, explained that for the March quarter is a bit special because the property development has seen robust sales recognition. So far, for the March quarter, it posted a quarterly revenue of 100 million. For context, for the past 10 years, the highest annual sales for the property development is only 45 million. He explained that because one of its projects in Masai, Johor, it's already reached a very advanced stage. It's sort of like a build then sell model, and in that March quarter alone, the sales is very good. About 40% of the unit of the 300 million project, 40% is sold on the March quarter itself. Hence, a very big recognition. But what's ahead? For one, there is a high potential JB development near the RTS link. It's called the Ardens Residence. It's one of the highest per square feet residential project in Johor Bahru now. The GDV is 800 million, but it's a JV with a Singapore listed company, Astaka Holdings. So Kimlun gets a share of 49%. So this project for the non-Bumi units, mostly it's already sold out. The project can deliver about 140 million profit before tax, and it can be recognized across 5 years. So Pang said this can be recognized as soon as end of the year. Aside of these two, they are going to launch another phase 2 for the Masai residency project, which around another 300 something GDV. So the pipeline is around 1.4 something billion.
Meanwhile, Kimlun's construction division continues to be buoyed by the robust Johor property market, underpinned by a 3.11 billion ringgit order book, comprising 77% building works and 23% infrastructure projects. About 70% of these contracts are in the state, with the remainder spread across Sarawak and the Klang Valley.
So most of the project building works is because of the high-rise buildings, because of the property boom. And Pang said it will have possibility for the next 2 years. They also plan to replenish their order book by 1.5 to 2 billion. Because there is a major boom in Johor, so roads are getting congested. So another play is the Johor infrastructure play, which is well poised for this Kimlun, which is a Johor-based construction company. The other is the East Malaysia side. They have a sizable order book for the highway projects. And unlike the first, they already set up a strategic raw material supply. So they think that this time is different. If the East Malaysia side infrastructure comes up, they will deliver better. So again, this is already reflected in their margin. You see their margin already bottomed up, it's recovering back. It's now about 7%. Their usual is about 8 to 10%. The other division is the precast division. So they have 2 plants, one in JB, the other in Senawang. So the JB plant is maxed out. It's fully catered to the Singapore MRT job. And Singapore, there is one advantage. They have outlined their roadmap until 2030. So Kimlun can plan ahead. And they said like in Singapore, they rarely miss what they say. So in short, Kimlun, they are supported by their high-rise building construction order book. But if Malaysia, the land transport infrastructure revival, there is more jobs for them. And on the property development side, usually if it's well executed, the margins are very good.
Kimlun currently receives coverage from Kenanga Investment Bank and Hong Leong Investment Bank, which have buy calls and an average target price of 1 ringgit 40 cents.